Facts, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World headquarters, I'm Charlie Pellet. We've got 19 minutes to go ahead of the closing bell. The Dow, the S&P, NASDAQ, all in the red. We begin with a developing story and a headline from the Bloomberg Professional Service. Sources tell Bloomberg U.S. authorities are ratcheting up pressure on Sam Bankman-Fried's inner circle as they scrutinize former close FTX associate Nishad Singh. Right now, we have got the S&P down by 1.1%, down 41 points. Stocks are being weighed down by strong labor market data, which is likely to keep the Fed firmly on its path of rate increases. The jobs report tomorrow morning, 8:30 a.m. Wall Street time, with the Dow now down 323, down 1%. NASDAQ down 135, a drop there of 1.3%. 10-year yield 3.70%, with the 2-year yielding 4.44%. Spot gold down 1.1%, 18.33 the ounce, and West Texas Intermediate crude up 1.3%, 73.76 a barrel. Tech companies, including Amazon and Salesforce, have announced job cuts. So does that make the group any more appealing? Cameron Dawson is Chief Investment Officer at New Edge Wealth.
I think the biggest impact to global markets would likely be in Europe, to see the most benefit from more lasting peace there, simply because there would be more confidence about energy security and maybe more risk on taking within European markets. But I don't think that the impact to the U.S. is that meaningful at this point.
And we've got Cameron Dawson there talking about the effects of a ceasefire between Russia and Ukraine. Comcast higher after Truist upgraded the cable company to buy from hold. Comcast up by 1%. Charter up 2.1%. Gap, Victoria's Secret both lower after a UBS analyst cut his recommendation on both retailers to sell from neutral. Gap down 3%. Victoria's Secret down by 7.7%. I'm Charlie Pellet, and that is a Bloomberg Business Flash.
Thank you so much for that update, Charlie Pellet. Bloomberg Business Week is brought to you by Innovation Refunds. This is your daily reminder from Innovation Refunds to apply for a payroll tax refund if your small or medium-sized business was impacted by COVID-19. Innovation Refunds clients already claimed over $2 billion in payroll tax refunds. Get started at getrefunds.com.
I'm driving in my car. I turn on the radio.
How about you let me drive?
Oh, no.
Who's gonna drive you home?
Honey, please, I'll do the driving.
Drive on.
Excuse me, I want to drive.
It's
It's the question that drives us.
This is the Drive to the Close
That funky music will drive us till the dawn.
on Bloomberg Radio.
All right, everybody, it is time for the drive to the close. We've got about 17 minutes left in today's trading session. Were you going to say something to me?
I wasn't. I was just thinking about our next guest. I'm excited to hear from Sam.
I love talking to Sam. I've talked to him so much over the past few years and throughout so many different cycles in the markets. And he's someone who really looks at trends and what goes on historically when it comes to the financial markets.
We're talking about Sam Stovall, Chief Investment Strategist at CFRA. He joins us this afternoon via Zoom from New York City. Sam, good to have you with us this afternoon. Okay, we've been talking a lot about 2022, but we've been talking more about 2023 and what it has in store, because the start of the year, unless you're, a share of a Chinese company traded here in the U.S.,
Yes.
things are not looking good. What's your read?
Hey, Carol and Tim, good to talk to you again. Well, it seems as if we are heading into 2023 the way a lot of strategists had been predicting, where it's going to be a tale of two halves, where the first half is likely to be challenging with high volatility, retest of the October low, maybe even a new low set. But then investors look across the valley and we start to see a recovery in the second half.
It sounds really logical, right? It makes sense, right? If we think about it, and I'm guessing to some extent, Sam, a lot of it is because of the Fed coming to, at least it's the end of this cycle when it comes to rate increases. It may not start to cut rates, as they continue to remind us, but they may come to an end when it comes to higher rates.
That's right, Carol. Our expectation is that the Fed will raise rates by 50 basis points in February, 25 in March, and then hit the pause button. But the Fed, even though they keep saying, don't anticipate a rate cut, they do remind us that they are data dependent. And it was the data that caused them not to start to raise rates and then to play catch up. And since the Fed typically ends up cutting rates less than 9 months after the last rate hike, that would squarely put it into December for the first rate cut of the next cycle.
Hey, I got to go though, challenge a little bit here, Sam, because I feel like this is a market cycle we really don't completely understand, right? We never, most of us have not gone through a pandemic before where the market shut down, the economy shut down, and then it kicked right back up thanks to lots of stimulus from governments as well as from central banks, global central banks. So we're still trying to figure out what the normal is. Is the normal what we saw pre-pandemic, or is it something different as a result of all of the stimulus and so on?
Well, I think that the normal was pre-pandemic. We then got the abnormal in terms of the pandemic. We got the abnormal in terms of response to the pandemic. And now I think we're sort of getting back little by little to the pre-pandemic cycle, nature, et cetera. Obviously, one big difference is that the 40-year secular bull market for bonds or bear market for interest rates has certainly changed. We're bouncing along the bottom, if you will, because the average 10-year note since 1953 was about 5.5%, and we're obviously nowhere near that, but certainly we're a lot higher than the 1% to 2% that we had been experiencing just a couple of years ago.
So it brings me to where you recommend our investing audience allocate their capital for the year. Let's say somebody has some capital to deploy. What are you suggesting based on your analysis at CFRA?
Well, the right answer to most financial questions is that depends.
Time horizon, how old you are,
exactly,
and your goals.
Well, even time horizon just in terms of this year. A very simple model which looks at a rolling 200-day performance for the 11 sectors in the S&P would continue to recommend a defensive approach in terms of healthcare, consumer staples, utilities, at the expense of consumer discretionary industrials, not industrials, but materials, technology. And so because, one would say we're not really sure what the Fed's going to do and when, maybe we want to stay defensive at least for now. However, what is the longer term opportunity, I would tend to say, is almost the complete opposite. I've had people ask me, Sam, do I hold them or do I fold them? Meaning, do I stick with last year's winners as I head into 2023, or do I go from first to worst? Meaning, get rid of those groups that did the best and look to those that did the worst. And the right answer is, following a down year, more times than not, you are actually better off buying last year's losers than last year's winners.
Kind of that dogs of the Dow theory, right? To some extent, but just more broadened out.
Exactly, because basically those companies or industries that were priced to go out of business or at least be challenged are the ones that now experience a vacuum of valuations, as I like to say very carefully, and therefore represent the greatest opportunity 12 months down the road.
What about something that, we've talked a lot, Sam, about how things, though, fundamentally, there's some stuff going on that maybe is going to impact certain sectors, whether it's energy, whether it's geopolitics, whether it's the pushback on globalization. Is there anything out there, though, that, kind of skews your thinking in terms of what will be the smart investment plays this year?
Yes, and I think you hit the sector on the nose in terms of energy, because energy has done very well over the past 2 years, although it had been doing horribly over the prior 5 years. And so now that we're rolling back into it, now that energy was up more than 50% in 2022, the question is, do I take my profits and run? Well, if earnings are expected to be pretty good next in 2023, if the sector is trading at a near 50% discount on a relative basis over the last 20 years, and a 47% discount on an absolute PE basis, the group is still very inexpensive. And from a geopolitical perspective, if we continue to have supply disruptions from the energy area, and we don't get a recession as deep as some are worried about, right, energy could continue to do well.
Well, so great to check in with you. As always, Happy New Year. Sam Stovall, Chief Investment Strategist at CFRA, joining us via Zoom right here in New York City. We've got just about 10 minutes left in today's trading session. We're bouncing around a little bit here. Some volatility continuing on this, third day of 2023. You're listening and watching Bloomberg Radio.
It is 3:53 on Wall Street. I'm Charlie Pellet with today's company headlines. Amazon is laying off more than 18,000 employees, the biggest reduction in its history and the latest sign that a tech industry slump is deepening. Brent Thill is an equity analyst at Jefferies. He says he's expecting far deeper cuts at other big tech firms.
This isn't shocking. The magnitude should probably be higher. It may end up being higher. Jefferies is forecasting a more prolonged recession and a later start to the recession, which is bad news, meaning this just gets dragged out, potentially even into 24. So that is the scary news of this whole thing, that this is probably the tip of potential layoffs in the tech industry.
And right now we've got Amazon shares down 2.3%, all part of a broader sell-off. Bed Bath & Beyond says it might not be able to continue as a going concern, bringing another retail chain to the precipice of a bankruptcy. Bed Bath & Beyond plunging by 30%. Genesis Global Trading has laid off more than 60 employees in its latest round of job cuts, amounting to roughly 30% of the troubled crypto brokerage's workforce. Coinbase shares are lower after the cryptocurrency exchange downgraded to market perform from outperform at Cowen. Right now we have got shares of Coinbase. They are lower today. Coinbase down by 10.9%. Stocks are lower, and those are some of the company stories we're following this hour. I'm Charlie Pellet, and this is Bloomberg.
You're listening to Bloomberg Business Week with Carol Messer and Tim Stenevec on Bloomberg Radio.
All right, just under 5 minutes left in today's trading session. We're going to soon join our TV colleagues to talk about the trade. Having said that, story you mentioned on our planning call this morning about Silvergate.
Yeah, this is really interesting. We heard Romain mention it as one of his decliners today because shares are just tanking right now. Silvergate Capital made one of the U.S. banking world's biggest bets on crypto, and now it's reeling from a run on deposits and a massive loss, intensifying fears that the collapse of crypto exchange FTX may seep elsewhere into the financial system.
It's just a reminder that, right, we're still, figuring out the carnage and the result and the connectivity between different folks and what it all means. We do have to remind everybody, too, that there's been some headlines crossing the Bloomberg. The U.S. is closing in on Bankman-Fried's inner circle with a probe into Mr. Singh, who I believe, I'm just double-checking, we were talking about that, he was the former engineering executive, Nishad Singh, who was key in terms of the whole FTX empire.
And I said that Silvergate was tanking. That is indeed correct, down 43% as we speak, Carol. The company, also some more crypto news. Genesis, the crypto brokerage, letting more than 60 employees go in another round of cuts, amounting to roughly 30% of its workforce.
Yeah, I mean, a lot of this stuff just continuing to unfold. We know this. We knew this last year, that this is going to be a big story. We know there's going to be the trial of Sam Bankman-Fried, later this year in the fall. What?
Well, I'm just thinking of something that I said last week. I was talking to a really smart friend of mine who about the market decline for 2022, and he said, you know what? If you look at crypto and the way that we saw the collapse of FTX and 3 Arrows Capital, the contagion has really been limited to crypto and crypto firms. We didn't
Meaning unlike the financial crisis.
Yeah, exactly, unlike the financial crisis. So it's kind of, it's not as bad as people think.
Well, it's certainly right. I mean,
we're not as bad as it could be in previous crises.
Right, a very different crisis, right? A financial crisis of sort, right? No doubt about that, and it's unfolding, and we'll figure out exactly what happened as these investigations by regulators continue, but nonetheless, very different from the financial crisis, which, your major financial community, big banks, were certainly involved in.
Crypto wasn't the backbone of anything yet.
No, exactly. Housing market, right? People owned houses. People speculated on housing. It really touched. There were so many touch points.
Blockchain yet.
Stop it. Stop it. All right, just a few minutes left in the trading session. We're going to join our TV colleagues, talk about the markets. Bloomberg's Beyond the Bell, starting right now.
As we take you to the bell and beyond.
Beyond the Bell, Bloomberg's comprehensive cross-platform coverage of the U.S. market close starts right now.
And right now, we are 2 minutes away from the end of the trading day. Romain Bostic alongside Katie Greifeld. We're counting you down to the closing bell, and here to help take us Beyond the Bell. It's a global simulcast with Carol Massar and Tim Stenovic. Welcome to our audiences across Bloomberg Television, Radio, Quick Take, as well as on YouTube. I'm looking, Carol, a lot of these individual stocks, and you look at sort of what's down, what's dragging us down. A big read on the economy. You have a Constellation Brands down 10%. People aren't buying beer. You have Sherwin-Williams down. People not buying paint. You have software stocks down because a lot of analysts are concerned that you're going to start to see a slowdown in business spending. What gives, Carol?
You know what people are buying? French fries. Lamb Weston. I'm going to talk about it in a little bit.
You've heard of Lamb Weston, Katie?
I've learned a lot about it over the past 24 hours.
It's a favorite of Romaine. But anyway, you know, there's winners and losers. Right now, the losers are winning, certainly in this trade when you talk about stocks.
Well, it brings me back to that earnings recession conversation that we had in recent weeks with analysts saying that's still to come. And we're starting to hear some of that from companies that are reporting, not necessarily pre-announcing, but companies that have said, okay, wait a second, like a Constellation Brand, saying that these prices going up for commodities and also weakness in California, for example, are leading people to buy less beer. That's real.
Yeah, it feels like from the headlines that we've gotten so far, again, we're not really in the heart of earnings season yet, but haven't seen any good news in a while, it feels like.
Yeah, and then, of course, that brings us back to the labor picture. We had the ADP report that showed a resilient labor market. Maybe that feeds into the big payrolls report we get at 8:30 on Washington time tomorrow. But then you see, okay, Helen of Troy cutting jobs, Amazon cutting jobs, Salesforce cutting jobs, Slack cutting 10% of its product force, if you believe some of the reporting out of Insider.
But not everything coming undone, right? Like, despite some of those negative headlines.
Yeah, and so we'll put it all together here. Let's get you a quick check here where we stand as we get the closing bells here in New York, down basically about 1% across the board, with the Dow Jones Industrial Average down by about 340 points, 1% lower. The S&P 500 down 45 points, or 1.2%. The Nasdaq Composite down about 1.5% on the day, while the Russell 2000 looks like it's going to close out down roughly about 1.1% on the day. But Carl, I do just want to point out that when you look at the actual levels that we're at, we're really not anywhere different than where we were, I don't think, 2 or 3 weeks ago. This has kind of been a little bit of a tight trading range, a little bit of a holding pattern.
Yeah, Mark and Time, we just talked with Sam Stovall. I mean, talking about a tale of two halves. Until we get through, you know, definitive ending of those Fed rate increases, you know, this is probably how the markets are going to be. The second half, though, Katie, could be a different story.
Could be a different story. I don't have a ton of good news for you right now. If we look at the industry groups, 22 of them are down right now. Energy at the top, doing okay, up 2%, different picture than what we got yesterday. You also have telecom doing pretty well today, up about 1.5%. T-Mobile leading a lot of those gains, but really from there, it's all a sea of red. Right there at the bottom, you have real estate. Again, yields are higher today. Rate-sensitive sectors of the economy not doing too well. You see that in real estate, off by 2.7%, Carol.
All right, so let's get to some of the gainers in today's session, just bringing them up on my Bloomberg. I mentioned Lamb Weston. I love this name. I know Romaine loves it. Crinkle, diced, mashed, waffle, you name it.
Waffle.
Who doesn't love a...
I like Crinkle.
Yeah, I would love to see Lamb Weston like break out their sales by the type of fry. I think Crinkle would probably be at the bottom.
Do we do that on the...
That's got to be like
do we do that on the revenue page here on the Bloomberg? I don't think so. All right, Lamb Weston, though, check it out. Up 9.6%. This is the #1 gainer in the S&P 500 today. Soaring to, I believe it might be ultimately a record. I think it is today. Adjusted EPS trouncing estimates in the second quarter. The company, check it out. You want outlook? Here you go. Company boosting its annual outlook for sales, gross margin, and earnings targets. Stock gained 41% last year, and it's off to a pretty bullish start here in 2023.
And that was a record high, by the way.
Thank you very much, because I knew it was an intraday, so thanks for checking on that. Warner Brothers Discovery. Remember I talked about this as a gainer yesterday? There was no real news, and I do wonder if somebody... I don't know.
All M&A speculation.
Yeah, I guess so. Up another 4.6% in today's trade. Top in the S&P 500, NASDAQ 100. The company CFO making some remarks at an investor conference today. They talked about planning twice as many theatrical releases in 2023. They talked they're on track to debut a combined streaming service in the spring. And they really did talk about that the restructuring of last year, it's kind of over. The write-off frenzy is over. And that they're setting on rebuilding compared to last year's focus, as I said, on restructuring. All right, one more for you. This was top 2 in the S&P 500. Let's bring it up. We're talking about Western Digital. It's up about 6.6% here at the close. Bloomberg reported that the company had restarted merger talks with Japan's Kioxia. I hope I'm saying that correctly. Analysts saying any deal between the two would create a company with notable scale in the NAND flash memory market. So there are some of the gainers. Those are some big standouts today, Tim.
Yeah, kind of harder for you to find gainers than it was for me to find decliners today. Rounding rounding out the S&P 500 on a points percentage basis, I should say. Amazon.com dragging on the S&P today, down 2.4%. The company, of course, laying off 18,000 employees, the biggest reduction in its history. We spoke a little earlier to Brad Stone, senior executive editor for Global Technology here at Bloomberg. He's written a couple books, fantastic books on Amazon, and we asked him if he thinks that Jeff Bezos is going to come back. And before I even finished asking the question, he was shaking his head, no way. So we're not going to see a boomerang CEO. At least Brad doesn't think so anytime soon. He said Jassy's got a few years to prove that he is the heir apparent that Bezos thought he was. Microsoft finishing the day down for a fourth day in a row, close to 3%. We did see tech and internet stocks lower today. This after it fell more than 4.4% yesterday, down 7.7% just in the last 4 days alone. And then, Romain, you mentioned this Constellation Brands showing some weakness in its beer division today, finishing the day down by 9.7%. It's the company behind Modelo and Corona. It lowered its earnings forecast. It said that higher costs across the supply chain. I mean, think about steel, bottle caps, cartons, and more, and then economic conditions as well. And then just a couple others here that I know you touched on earlier, but now the market's closed. Silvergate Capital closing with a record one-day drop of 43%. It fired 40% of its staff, crypto exposure. And then Bed Bath & Beyond closing down 30% to its lowest since November of 1992. KeyBank says the stock is only worth 10 cents.
Can't buy anything at Bed and Bath & Beyond for 10 cents either.
The bond market already pricing that in, particularly when it comes to the Bed Bath & Beyond stocks. And we talk about the pricing that we're seeing in the sovereign debt markets here, a repricing, if you will, on the short end of the curve, pushing rates on the 2-year yield up almost 10 basis points here on the day, as well as a 10-year going up roughly about 2.5 basis points here. A lot of folks, you go back just a couple of days, guys, it was like, well, they were sort of underpricing where the Fed funds rate is being targeted for by the Fed itself, and now that's flipping up right now. When you look at some of the swaps that are linked to the individual Fed decisions, we're back at that 5% level now.
And you see how that dynamic is filtering into the yield curve. We're looking at a bear steepening right now. The 2s10s curve, bear steepening, write that down. We're looking at negative 74 basis points on the 2s10s curve. What's interesting, if you look at what Wall Street is expecting, a lot of the big banks actually expect this curve to steepen in the coming year, but it has a long way to go.
But did you see the interview? We're going to speak with Liz Capel-McCormick of Bloomberg News a little bit later on TV. She had an interview with Cam Harvey, who, of course, is credited with sort of coming up with this theory that the yield curve does sort of presage recessions. He's actually saying that it's kind of a broken indicator now, primarily because everybody sort of recognizes it, so it kind of doesn't work if everybody acknowledges it.
Can I ask you guys, what do you think is the important discussion? I mean, I think we all think that we're going to probably have some kind of recession at some point, right? You know, is it talking about a 2% inflation goal, you know, getting back to normal? Like, what is the smart conversation right now, considering that I think a lot of people have a lot of different perspectives here?
I think it has to be the conversation that we've been having, right? Is the depth, the magnitude, how long that recession lasts, and also when you think about the terminal rate, I mean, how long do we actually stay there? That has a lot of ramifications for whether the Fed is able to continue shrinking its balance sheet.
Well, can I just add, though, I mean, Carol, because I mean, I think your question is right, but I would sort of reframe it, because everyone keeps talking about this idea of how damaging the recession can be, whether it's going to be short or long, and how severe. But I think it's also what's sort of the baseline of growth that we get after that, right? We're so used to these elevated levels of GDP growth, the low levels in interest rates, and the idea is that we're probably not going back to that. It's going to be something in between, and the question is, what does that mean for market valuations? Has that been priced in, or is the market going to have to adjust to a new normal with GDP growth maybe at 1%, and interest rates still hanging out at 4 or 5%.
Well, it seems like the conversation has really been about markets adjusting to that new normal, where interest rates are no longer at zero. So we go back to what? The mid-2000s, or, you know, pre-financial crisis, early 2000s, and then also the 90s, perhaps, for an example of what things could look like. But growth was better then, right?
But, Romain, you make a good point, though. If we, you know, post-financial crisis, we had low growth, but we had really low interest rates. But if we go back to a kind of anemic growth environment, some growth, but barely, but we have higher rates, that is a new dynamic.
It is, and it's a new dynamic, particularly for a generation that really hasn't had to live with that, or at least invest in that environment. But what becomes of it, right? Because what is the market looking for when they talk about a pivot? They're basically talking about the Fed cutting rates.
Sam Stovall,
I didn't hear that out of Esther George. I didn't hear that. Even out of Bullard, I didn't hear that.
We just spoke to Sam Stovall at CFRA. He reminded us that typically the Fed cuts rates 9 months after the last interest rate hike. He thinks that would put us at a rate cut in December. So, you know, not what they said yesterday, but he's looking to history.
But this isn't a typical cycle. I mean, I think it's really important to look at history, how this usually goes. But then you think about what we heard from Neil Kashkari yesterday, again, that they want to hold at terminal for a while. They don't want to hike, and then immediately have to cut. Whether they're actually able to do that if the economy does deteriorate is an open question.
They want policy to be restrictive,
Just real
certainly,
quickly, guys,
throughout the year.
I know we're focused so much on the macro here, but I saw this is a smaller cap company. This is WWE, the wrestling company. The headline crossing, this is from the Wall Street Journal, saying that Vince McMahon, of course, the founder and former CEO, going to return to the company. But more importantly, the Wall Street Journal is saying that WWE actually expressed an interest in exploring a sale. So something to keep an eye on. Those shares actually higher in about 9% in after-hours trading.
All right, we got to run. All right, guys, that's a wrap for our cross-platform coverage, radio, TV, YouTube, and Quick Take. We do it all. We'll see you again, same time, same place.
You're going to CES, whether you want to or not.
I've been many, many years ago. It's changed a lot. I mean, a lot of it was consumer electronics. We know autos play a big component. When you go there now, it's a very different game in town.
There's always one theme when you're there. So one year the theme was wearables. This was the year before the Apple Watch came out. Apple had no watch. So everything there was about wearable technology. It was like, okay, what could you wear on your wrist?
I think I went there when there was wearables.
We didn't even know. We could have seen each other. We didn't even know each other then.
But there was crazy things like you would wear. I remember profiling a company that it was like fashionable. Like you'd be coming down a runway with like these things all around you, and they, I don't know, would do everything and anything.
The star of the show used to be TVs.
Yeah.
That was what CES was known for so many years. The good old days. Now they're just in some corner where the curved TVs are.
But I do wonder, you know, it's interesting. We've gotten some great reporting from our team who are out on the ground, including our Ed Ludlow. But what's interesting is, you know, when we do think about cars, right, we have this discussion when we're talking about Tesla specifically. Is it an auto company? Is it a technology company? Increasingly, you're having these vehicles, like you get it and it's a big screen. And all of the auto companies are increasingly, you get in the car and it's a big screen. You know, it's not so many budget, you know, buttons and things to kind of play around with. It's like a laptop.
I'm also interested to hear from Ed about the sort of the tone or feeling, or if there's like kind of a lack of excitement there, given all the layoffs that we've heard in the tech industry, and then also in a higher rate environment, are you going to see the startups proliferate like you have over the last decade?
I'm also wondering, because is this the first CES that's kind of all in post-pandemic?
They did it last year.
But was it different?
I don't know if it was, I mean, look, a lot of people, this was in the height of Omicron, so a lot of people said they didn't want to go to CES, and CES, the Consumer Electronics Association, said we are going to do CES, you know, basically come hell or high water, and they did it.
Yeah, exactly, which is kind of interesting to see them do that. And I guess that's really important, if you will. And, you know, one of the things that we talked about, and just going back to autos specifically, is, you know, these cars that increasingly, and what's fun about consumer electronics, same thing with the auto shows, the international and national auto shows. Like, you see these ideas of where things could go and where they're going.
That's such an optimistic look, because I look at these concept cars and I say, I'm never going to see that thing on the road.
Really?
Yeah. Oh, yeah.
All right. Well, listen, someone who's on the ground in Vegas, he's been maybe at the craps tables or something. I don't know where
he's working too hard.
I don't know about that. Let's check in with our Ed Ludlow. He's co-host of Bloomberg Technology and Bloomberg TV on site at CES in Vegas. We know you're working hard. First of all, set the scene for us. Give us an idea of the feel, the mood. Tim mentioned earlier we've had a lot of job cuts in the technology group. So just give us kind of the backdrop here.
I think you guys have really summed it up well. You know, CES is back. There are hundreds of thousands of people here. 2021 was a bit weird. It was a hybrid, or 2022, sorry, I'm forgetting my year. It was kind of like people dipping their toe. A lot of the stuff was still virtual. But the hotels are packed here. The convention center is packed. And thematically, you're absolutely right in what you were saying. It's weird because it's called the Consumer Electronics Show. But actually, so much of it has nothing to do with consumer electronics. It's all about cars and automotive technology. And I think for me, the big difference this year from when I was last here in person in 2020 is they've kind of got rid of this fanciful, future-looking, concept-y stuff, and they've started getting real on products that will hit the real world either this year or in the next 2 years. And do you know what we're calling it this year, guys?
What?
On the Bloomberg News team? We're calling it the sexy realism.
Oh, okay. I don't know if you can say that.
Can I buy a T-shirt?
I'm glad you did.
That's all I want to know.
Ed, you know, I think people who haven't been to CES don't understand the scale of it. But even it is such a huge event across multiple venues, across Las Vegas' Strip. A lot of the action happens away from the show floor, in meeting rooms, in hotel suites, where you have executives from some of the biggest companies in the world who don't even have an official presence at CES making deals about the next big thing to come. Tell us a little bit about what your reporting has found and what you've heard about, you know, what's happening outside of the floor.
Yeah, that's completely right. I mean, the way I would put it is that how many times a year are all of your best customers, biggest customers, investors, partners all in one city? You know, take Mobileye, for example, the maker of system of chips that do advanced driver assistance. They have customers across German, American, Asian, Chinese car makers. Well, CES is pretty much the only time where all of them are in one place. So for Amnon Shashua, the CEO, he can take all of those meetings in 1 week, right? And rather than going to the Detroit Auto Show, then the LA Auto Show, then the Shanghai Auto Show. Actually, CES gives a big concentration. The other thing, guys, is like you can't get away from the biggest stories in technology right now. Amazon laying off all of those people is the big headline. And in the corridors, people are talking broadly about how difficult the global economy is now. Why? Because it's not just the executives that are here, their bankers are here as well. And I can tell you a lot of sources telling me that actually the message right now is we're not doing anything. We're not raising funds. We're keeping powder dry. It's a really tough environment for tech.
That's interesting. Hey, listen, we want to go back, though, to something Tim and I were talking about, and we know you've been covering, and that is the auto component of what's going on at consumer electronics. First of all, for everybody who's watching on YouTube and on Bloomberg Quick Take and listening on Bloomberg Radio, let's just play a little bit of Ed's interview earlier with the CEO of BMW. Check it out.
We think it's absolutely right to propel new technologies into an industry here in the United States. We're investing heavily in our plant in Spartanburg to transform that plant into an electric plant. And we invest $1.7 billion into that plant for this type of transformation. And of course, if that would be not part of IRA, we would ask ourselves, what do you have to do? What kind of investment you would have to do to make that eligible?
All right, that, of course, is the CEO of BMW talking with Ed earlier. You talked with Oliver. What else did you take away from that conversation?
Well, that was the weirdest night of my professional life so far, and I'm not exaggerating. So Oliver Zipser is the CEO of BMW. BMW is this storied German automaker, which is all about manufacturing and efficiency. Last night was bizarre. You had David Hasselhoff in the promo video. You had Arnold Schwarzenegger on stage. And then you had their latest generation of car, DEE. Digital Emotional Experience is what it stands for. And basically, BMW has just done a hard pivot. Like, I don't know if you guys have ever driven a BMW, but it's all about performance and handling. And what they demonstrated last night was a vehicle concept where the dashboard has no buttons, okay, no dials. The windscreen is augmented. There's augmented reality. A display is part of the windscreen. And what BMW is saying is, like, this is where we're going now. We think the experience is different. We're actually going to really double down on software, artificial intelligence. And this goes back to what we were talking to. Is this real? Well, BMW says this will be in production cars in 2025. And now I've reminded myself it's 2023. That's only 2 years away. So this is the kind of change, right? These are futuristic things, but the car makers have got much more real about delivering them into the real world.
Ed, wait. If there's no buttons to push, how am I going to fight with my family over the temperature in the car and, like, what music to play? Come on, that's no fun.
So the technology is quite simple, and that's easy for me to say. It's not simple at all, of course. It's a voice assistant where you make commands via voice, and also a sliding scale. So imagine on your dashboard 3 dots, 1, 2, 3, 4, in a horizontal line. Level 1 just shows your windscreen. You press the second one, and suddenly your speed and your emails pop up. Level 3, even more information displayed on the windscreen. Level 4, a completely augmented reality display where what you're seeing is not through the window, but it's a computer projection. And that, BMW says, will be real.
All right, Ed, you know, last night might have been the weirdest night of your professional life, but there's always tonight because I know, you know, it is Las Vegas, so.
The Hoff.
What is it, the 1990s? Why are we talking about Arnold and David Hasselhoff?
I don't know.
Yeah.
Talk about, you know, Flashback Thursday? Is that what you're saying?
Yeah, I think so.
All right, Ed Ludlow, of course, the co-host of Bloomberg Technology here at Bloomberg, joining us from the Consumer Electronics Show in Vegas. Carol Massar, Tim Stanovic, do you like the buttons?
I like the buttons.
Okay.
headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World headquarters, I'm Charlie Pellet, just getting some headlines out of Costco. It's reporting total comparable sales for December that beat the average analyst estimate. Total comparable sales up 5.5%. Costco's estimate was a gain of 5%. The Dow, the S&P, and NASDAQ all lower again. Losses on Wall Street as investors grapple with continued evidence of strength in the labor market, fueling speculation the Fed does have room to keep raising rates. We get the all-important jobs report tomorrow morning, 8:30 a.m. Complete coverage, as you have come to expect over the years, right here on Bloomberg Radio. Today, though, losing day with the S&P and NASDAQ firmly in the red. A 1.2% drop today for the S&P, down 44 points. The Dow was down 339, down 1%. NASDAQ down 153, a drop of 1.5%. 10-year yield 3.71%, with a 2-year that's yielding 4.45%. Gold lower by $21 the ounce to $18.33, down 1.1%. West Texas Intermediate crude up 1.3%, $73.78 a barrel. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
Thank you so much for that update, Charlie Pellet. Bloomberg Business Week is brought to you by Innovation Refunds. Your business may be eligible to receive a payroll tax refund. The application takes around 8 minutes. 8 minutes or less to see if your small to medium-sized business may be eligible for a refund of up to $26,000 per employee kept on the payroll during the pandemic. Find out at getrefunds.com.
All right, Tim, time to take a little bit of a deep dive into biotech stocks, because as a whole, they were down about 26% last year, compared with a 33% drop in the NASDAQ 100. So a little perspective there. And I do feel like a day does not go by that there isn't some news out of the biotech space regarding test trials on some drug development or some kind of investment or deal that going on. So really smart for us to take a deeper look into this group.
Yeah, really excited to speak to Deborah Netshirt, Health Sciences Portfolio Manager at the Registered Investment Advisor Jennison Associates. It's got $164 billion in assets under management. Deborah joins us on the phone from New York City. Good to have you with us this afternoon. So before we start about talking about what's happening this year, let's just think back to the last couple of years, because I think for a lot of investors, biotech came on their radar with talking about companies like Moderna developing an mRNA vaccine, and perhaps, a different group of investors now paying attention to a group of companies that has been historically volatile, but has also offered potentially a lot of promise.
Yeah, I think that's right. I think that when you look at all of the different investors that came into the market during COVID, they looked at the Modernas and the BioNTechs and the Novavaxes and all of the rapid development of the COVID-19 vaccines, and started to think that there was going to be an opportunity to see accelerated development like this in other categories. And the problem with with that is all of these vaccines were really developed under an emergency use authorization, and that was a very distinct pathway used at the FDA, and development takes time. And I don't think that the pathway that the FDA used in the rapid development we saw in COVID-19 vaccines is really going to be relevant. And so some of these investors really expected us to see follow-ons with COVID-19 paired with RSV, paired with flu, and really start to be able to see these vaccines kind of coming out at a really rapid rate, and some of the reality of kind of going back to the normal drug development timelines, and then just the reality of the bolus of patient population that these vaccines were serving kind of brought people back to reality.
I have to say, I always love the different conferences, whether it's ASCO, which looks, into cancer, because you always get a lot of news out of it in terms of drug development or what companies are working on what. So what might kind of be some really innovation or innovation that we're going to get out of the biotech sector this year that investors should maybe take note of?
Well, I would say there's always a lot of innovation, and there's always there's a lot of data that comes out at all of the conferences. So we're starting to see a lot of things coming out. A lot of innovation is actually interestingly happening in the larger cap companies, and it's the first time that we've seen the larger cap companies start to enter new product cycles, have a resurgence in growth, and have the ability to really positively impact their revenue and EPS profile over the next couple of years by some of these big markets. Obviously, we've seen a huge increase in the use of the GLP-1s that are approved for diabetes, but are also in certain instances approved for obesity, and soon to hopefully be approved for obesity for other companies. And you're seeing a huge use of this group of drugs, and I think you're going to start to see a lot of additional indications coming out of that. We're starting to see some, we have gene therapies that have now been approved that are on the market, so it's going to be really interesting to see how the business models for these single, very expensive, yet, sometimes curative
Well, Deborah,
are really going to be able to be there.
Deborah, forgive me for interrupting, and I know you're a portfolio manager, and I don't know how deep you can go for us. I know our audience always loves whether it's sectors specifically or talking some names. Like, are there? And again, I don't know how deep you can go. Can you throw out some names to us that you think, wow, these are definitely on my radar, or if I'm looking to commit some new money for investors, that's what I'm going to think about?
I would love to do that, but unfortunately, I would have had to have things cleared before doing that on today's program.
No problem at all, Deborah. We needed to ask. Hey, one thing that I really want to hear from you is, obviously, the investment question is really fascinating, but at the same time, you're cover a space that is just really exciting from a human perspective. We all know people who've been affected by just terrible diseases, and I wonder, given what you cover and how much research you do into these companies, what just excites you about living in a world where we could soon, be living longer and saying goodbye to some diseases that previously were death sentences?
I mean, I think exactly that. I think, I always say that it's a gift to be able to get what I do, because if you have endless intellectual curiosity like I do, you really are able to stay on the forefront of really looking at the diseases and all of the new innovative treatments that are coming out. And I also view my job as a shareholder of companies to be helping companies who are going at this for the first time and helping them to not fall into some of the pitfalls.
Paint a picture for us, 10, 15 years from now, when it comes to some of these moonshots. I mean, do we say goodbye to chemotherapy and instead we can talk about gene therapy? Or
yes, I'm thinking.
Well, I mean, look, I hope that in 10 years we are saying goodbye to chemotherapy, or we're finding a way. I mean, we've seen innovation with chemotherapy through drugs called antibody drug conjugates that take the chemotherapy and develop it to only the cells that need it, as opposed to ablating all cells. And so that has allowed cancer patients to already receive chemotherapy in a way that it's not so toxic. So hopefully we're either, continuing down that, and, there could always be a use for chemotherapy, but hopefully in a decade we're really changing the curve on personalized medicine, where we're really starting to understand an individual cancer in the individual person and being able to target that cancer in a super specific way, and curing cancer individually, one person at a time.
And we know that you're part of the managers for the PGIM Jennison Health Sciences Fund. And I just want to, because our audience cares about things like this, 3 years, if I look at the average annual performance, according to Bloomberg data, up about 11%, putting it in the 90th percentile. And United Health, Eli Lilly, Merck, these are some names that are in it, Humana. I mean, as you say, there's a lot of large cap names. While we often think of biotech as kind of smaller startups, it really is a lot of these bigger cap names that are very involved in setting the trends of what's to come when it comes to healthcare.
It is. The larger companies are definitely the ones who are setting the trends in a way, and the innovation happens in both camps. A lot of the innovation that is currently in the hands of a Eli Lilly or a Merck or you name the large cap company came from a small cap biotech. So it's not to say that the innovation starts at the large or the small. It kind of happens across the spectrum. But, the super innovative companies that develop drugs that are going to be incredibly efficacious typically will wind up becoming part of a larger company over time. So there's an ecosystem there that has worked, pretty well over time.
And listen, do you really care about what the Fed does or what inflation does? And just got about 30 seconds. Does that really shape your investment decisions?
I mean, it has to around the edges. I think all of us have had to become armchair macro experts here and there. But at the end of the day, my colleagues and I at Jennison really try to focus on the fundamentals.
All right. Really appreciate it, Deborah, and look forward to next time and maybe digging a little bit deeper into your portfolio holdings. Deborah Netchert, she is Health Sciences Portfolio Manager, Jennison Associates. As we said, they've got roughly $164 billion in assets overall under management. And talking about our fund, as I mentioned, over 3 years, they've really been certainly on one of the funds that she manages.
How do you do that on the terminal, Carol? This is so cool. You sent me this screenshot. Okay, so I type in PHS ZX US equity.
Yeah.
Yeah, then what do I do?
Wait, didn't I send it to you? Don't you just open it up?
I opened it up, but I want to replicate it myself.
I'll show you later.
Okay.
You just do a grab. When you're looking at something, just do grab.
Okay, very cool. Thank you for sending this to me.
This is what we love about Bloomberg. It doesn't matter how
You can
long
do
you're
everything
here.
on
You're
the
just
Bloomberg
discovering
terminal.
things. Tim's still a newbie, though.
I am,
But
2
he's
years.
been teaching me some things, too. That's how it goes. All right, you're listening and watching Bloomberg Business Week. Right now, world and national news off to D.C. and Nancy Lyons. Hey, Nance.
Thanks, Carol. 3 more votes today on House Speaker, with Kevin McCarthy losing every time. It's unclear if there will be another vote this afternoon. They have taken 9 votes over the past 3 days. President Biden will visit the Mexican border Sunday prior to conferring with the presidents of Mexico and Canada.
The president announced a plan to admit up to 30,000 additional migrants per month from Cuba, Nicaragua, Haiti, and Venezuela if they apply in advance on the web. He told them,
do not just show up at the border. Stay where you are and apply legally from there. You need a lawful sponsor in the United States of America, number one, and you need to undergo a rigorous background check. But if your application is denied or you attempt to cross into the United States unlawfully, you will not be allowed to enter.
the president accused Republicans of inflammatory migration politics when bipartisan action is needed to improve the immigration system. In Washington, Irv Chapman, Bloomberg Radio.
Russia's President Vladimir Putin has ordered a 36-hour ceasefire in Ukraine starting tomorrow at noon. The purpose is to mark Russian Orthodox Christmas. But Bloomberg national security correspondent Nick Wadhams says Ukraine and the West call it a propaganda gesture.
You have Vladimir Putin basically saying, hey, we want to do this 36-hour ceasefire, but then the U.S. and its allies saying we are in no mood to ease up now. So the U.S., Germany, and France essentially announcing they're going to expand the types and power of armor and weaponry that are going to go to Ukraine, with announcing a whole new range of armored vehicles that they're going to send.
Bloomberg's Nick Wadhams. Pope Benedict XVI is being mourned today, with Pope Francis presiding over his funeral at St. Peter's Square in Vatican City. He died New Year's Eve at the age of 95. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries.
Hits, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet, developing story after hours. Vince McMahon, World Wrestling Entertainment's controlling shareholder and former CEO, has proposed selling the company. This according to the Wall Street Journal. After hours, we do have shares of WWE up by roughly 13%. Down day on Wall Street today, third trading session of the brand new year. Red on the screen, stocks closed lower as continued evidence of strength in the labor market fueled speculation the Fed does have room to keep raising rates. So where might stocks head this year? Sam Stovall is chief investment strategist at CFRA, and he was our guest right here on Bloomberg Business Week.
It seems as if we are heading into 2023 the way a lot of strategists had been predicting, where it's going to be a tale of two halves, where the first half is likely to be challenging with high volatility, retest of the October low, maybe even a new low set. But then investors look across the valley and we start to see a recovery in the second half.
Indeed, valley for stocks today with the S&P down 44, down 1.2%. The Dow dropped 339, lower today by 1%. NASDAQ down 153, lower by 1.5%. 10-year yield ahead of the jobs report, 3.71%. The 2-year, 4.45%. Spot gold, 18.33 the ounce, down 1.1%. West Texas Intermediate crude rallied 1.4% today, 73.89 a barrel. Briefly, after hours, Duck Creek Technology shares higher after earnings, up by about 2.5%. The application software company raised its full-year forecast for revenue. Novacure shares surged 68% today after saying its lung cancer treatment improved survival. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. You are listening to Bloomberg Business Week. Carol Massar along with Tim Stenovec. Well, right now we want to kind of talk a little bit about social media.
I do. And you know what? Alex Brinka is with us, and she's fantastic. And you got to sign up for the Daily Tech Newsletter because she is a big part of that. To sign up for the Bloomberg Tech Daily Newsletter, just go to bloomberg.com/technology.
Yeah, always such great stuff. And she's writing about social media for 2023 because I don't know if you know this, everybody. The average amount of time spent on social media worldwide, 147 minutes or 2 hours and 27 minutes a day.
So easy to see that.
In 2022. This is a 2-minute increase on 2021 numbers. It's also the highest ever recorded.
So you going to give up?
I do try to cut back.
Okay. Well, I saw a guy walking and TikToking the other day, so he wasn't giving up. What's in store for 2023? With that and writing about it is Bloomberg News technology reporter Alex Brinka. She joins us via Zoom in our LA bureau. I don't know,
Wait,
Alex.
You have to ask her, how much time do you spend on social media?
That's a personal question, Carol, and she has to do it for work.
You know, I track it, I take a peek, but I'll tell y'all it's part of my job. So it may or may not be over that 2.5-hour mark that you put there, but I make a good excuse because it's my job to be on social every day.
Okay, I buy that excuse, and we love having you on the program, Alex. So here's my question, though. Where are people spending it on social media versus Instagram, traditional old Facebook, TikTok, Snap? What do we know about the data?
Traditionally, Facebook and Instagram have really been the winners there, but interestingly, TikTok has been on a tear basically since the pandemic, and that's been the place that a lot of the kind of young Gen Z millennials have been spending time, which in social media terms, where the youth is going is where a lot of folks think the industry is going. So that is probably top of my list in terms of where I think folks are spending time, or at least the chronically online set of people.
Yeah, I do. You know, it's interesting. I think when everybody, like, we were kidding about how much time we're spending, and people are like, oh, I'm going to come back, I'm going to come back. But it's so much a part of our fabric. I'm here doing a show. I'm on, Twitter, and, I'm following all these different things because you can find out a lot of information. Stories break. It's still such a part of kind of our fabric, if you will.
It is, and that's where a lot of these platforms are trying to capture your time, whether it's news and how you're sharing that news. They don't want you to text it; they want you to share it on their platforms, or if it's sharing your photos of your time with friends over the holiday. That is where a lot of us continue to spend our lives. So I think just the power and influence that these platforms have cannot be understated, which is why we're so excited to make some calls on what we should be watching into 2023 in the newsletter this week.
All right, okay. Number one, if there's one story we spent probably the most time talking about last year was Elon Musk and Twitter. What are you predicting over at Bloomberg Technology for what happens to Musk's platform?
I mean, you said it's Musk's platform. He has said he's looking for somebody to kind of fill a CEO role to oversee some of the parts of the business. So who is that kind of, is it a right-hand person? Is it a left-hand person? I feel like you never know with Elon Musk. Who is going to fill that role? That's one of the big questions we have. And you also remember Musk has this big $13 billion debt with some bills coming due early in the year. So when I'm looking at Twitter and when I'm looking at what we are caring about to start the year, particularly from a health of the business perspective, those are probably the top two things on our list.
All right. Did we talk about Trump's Facebook account?
No.
Let's talk about it. Is he going to come back?
He might. We're 2 days out, right? It's January 5th. We're 2 days out from the end of his initial ban. Facebook is under kind of no obligation to bring him back. He's been brought back to Twitter. We really haven't seen him be active there yet. So if they're looking at other platforms, it seems like the risk is pretty low. But we are 2 days away, so we do expect that Meta will have to make a decision as to whether or not he'll return to Facebook. And if he does return, look, we see the Republicans getting pretty loud this week with all those votes going on in the House. You can only imagine that he might have some things to say, and Facebook was one of his favorite platforms to do so.
But would he even go back? Because he's allowed back on Twitter, and he doesn't tweet.
He has Truth Social. He has other places that he's sharing his messages now that he seems to have kind of more of a vested interest in. But when it comes to audience, Facebook's got 3 billion people. So that is probably a pretty nice lure for somebody who really enjoys having an audience, and a big one at that.
Yeah, it does. Like, part of me just says it's going to be hard for him to resist, but who knows? We live in strange times. Cue a song by The Clash, Should I Stay or Should I Go? What's going to go on with TikTok?
So we were talking about TikTok. We were talking about how many users are on TikTok. Worldwide, it's over 1 billion. In the U.S., folks love it, but the U.S. government seems to not. TikTok has been almost 3 years into a national security review by an agency called CFIUS that looks at national security threats. And this question's been on the table of, is TikTok and their ownership by a Chinese company called ByteDance, is that a threat to national security? Now, it seemed like last fall they were getting closer to a deal that would allow them to stay here, but some big things happened in the months to end 2022, including a memo that went out saying that some employees internally actually accessed the private IP data, user data on some users, including some journalists who cover the company, and that's a really bad look. TikTok has been kind of going down to D.C., trying to assure that national security review, trying to assure Congress that they are keeping U.S. users' data safe. They basically said, trust us. We're putting in what they call access controls. But this news that broke December, I think it was 22nd, right before the end of the year, really is a bad look. And as soon as, this year kind of gets rolling, Congress has gotten really impatient. This national security review is happening under the Biden administration. TikTok's become a favorite punching bag of some Republicans in particular, and there's bipartisan concern. So in the first few months of the year, we will be watching really closely for any kind of resolution on this long drawn-out review on TikTok and a judgment basically on its Chinese owner.
And if you want to find out what Alex thinks about the tech lash and whether it returns in 2023, as we said, sign up for her Bloomberg Tech Daily newsletter. Just go to bloomberg.com/technology. Alex Barinka, thank you so much. Happy New Year. Alex is technology reporter here at Bloomberg News. Do you think Trump's going to go back to Facebook? And Twitter, do you think he'll use it?
I don't know the details of his contract with Truth Social. It seems like he's resisting because maybe he has sort of like a, you got to exclusively post here. And you know what? When he posts on Truth Social...
Does he have a financial interest in Truth Social?
Yeah. Yeah, of course.
So,
that's what I mean.
Yeah.
And then people take the post and they screenshot it and they put it on Twitter and stuff, so you end up seeing it.
You gonna let your son use social media?
For as long as I can prevent it from happening.
Yeah, it's just such a part of our world, right?
Yeah.
All right, everybody. Carol Massar, Tim Stanovec, you are listening and watching Bloomberg Business Week right here on Bloomberg Radio.
It is 4:53 on Wall Street. I'm Charlie Pellet with a look at today's company headlines. Costco's reporting total comparable sales for December that beat the average analyst estimate. Total sales up 5.5%. Estimates were for a gain of 5%. Vince McMahon, World Wrestling Entertainment's controlling shareholder and a former CEO, has proposed putting himself and two other former executives on the board of the company. We've got shares of WWE surging after hours. Amazon laying off more than 18,000 employees, biggest reduction in its history, and the latest sign that a tech industry slump is deepening. Tom Forte is senior research analyst at D.A. Davidson. He says big companies just had too many people.
So you had a very tight job market, especially in the technology area, and you had companies that ramped their headcount very significantly. Some of it was a miscalculation of demand, but I think some of it is turning out to be bloated headcount. So I think that there is a possibility that you could see some margin improvement at Amazon and some of these other big tech companies from scaling back their headcount. But I do think it is worrisome, again, for the current state of demand for e-commerce.
Amazon shares down 2.4% today. Bed Bath & Beyond says it might not be able to continue as a going concern, bringing another retail chain to the precipice of bankruptcy. Yeah, today we saw Bed Bath & Beyond shares plunging by 29.9%. And those are some of the company stories we're following. I'm Charlie Pellet. This is Bloomberg.
This is Bloomberg Business Week with Carol Messer and Tim Stenevec on Bloomberg Radio.
Hey, it's Bloomberg Business Week. Let's get a check on the latest world and national news. For that, we go to Nancy Lyons in the 99.1 newsroom in D.C. Hey, Nancy.
Thanks, Tim. Still no breakthrough on the push to elect a House Speaker. Kevin McCarthy has once again failed to receive enough support in 3 more votes today. Another one is coming. Former White House Chief of Staff Mick Mulvaney spoke with Bloomberg's Joe Matthew about the ongoing drama, and he suggested a tangible solution involving a GOP deal with Democrats.
We'll offer you a compromise candidate. I've used Fred Upton's name. Fred's a friend of mine. He's a moderate Republican. He doesn't mind me doing this. And say, look, we want Fred as Speaker. Yeah. You guys all vote for Fred, and what we'll do in return is we promise no investigations. There's no subpoenas. We'll do legislation, but no investigations. That'd be a huge win for the Democrats and a reason for them to support a coalition candidate.
Again, Mick Mulvaney speaking with Bloomberg. Buffalo Bills player Damar Hamlin is beginning to wake up after suffering cardiac arrest during Monday Night Football. Dr. Timothy Pritz with the University of Cincinnati Medical Center provided an update today.
We would like to share that there has been substantial improvement in his condition over the past 24 hours. We had significant concern about him after the injury and after the event that happened on the field, but he is making substantial progress.
Dr. Pritz says Hamlin is moving his hands and feet, but it's too early to determine whether he'll make a full recovery. The NFL says the game between the Bills and Bengals will not be resumed. Brian Kohberger, who's accused of stabbing to death 4 Idaho college students in their beds, appeared in an Idaho courtroom today. Judge Megan Marshall informed the 28-year-old of the severity of the charges against him.
The maximum penalty for this offense, if you were to plead guilty or be found guilty, is death or imprisonment for life. Do you understand?
Yes.
Court documents reveal some of the evidence in the case, like a knife sheath that was left behind with Kohberger's DNA and cell phone data showing he was at the area of the victim's home multiple times. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Nancy Lyons. Back to you, Carol and Tim.
Thank you so much, Nancy Lyons. Bloomberg Business Week is brought to you by Innovation Refunds. See if your small or medium-sized business could be missing out on an opportunity. Was your business impacted by COVID-19 in 2020 or 2021? It may qualify for the Employee Retention Credit. The professionals at Innovation Refunds can help your business recover from the pandemic. See how much could be waiting for your business at getrefunds.com.
All right. Well, Republican Kevin McCarthy blocked in his bid to become U.S. House Speaker for a historic 9th time today, leaving his party fractured and the chamber paralyzed for a 3rd straight day. For more insight on where we are and where we go from here, let's head to the host of Sound On. We're talking about Joe Matthew. He's there in our D.C. bureau. So, Joe, gosh, history. Here we are just a few days in on the new year, and politically we're making history. Where do we go from here?
Well, yeah, you say history. You know, we kept saying that this week when it went to a second ballot, that was the first time in 100 years that this had happened. It was back in 1923. That process went 9 rounds. We are now going for 10. So this has never happened again for the first time ever in 100 years. It's incredible that we're seeing it. Kevin McCarthy has no real idea when this will end. I'm sure he'd like to adjourn right now and go back behind closed doors and do more deal making. Problem is, the deals don't seem to be changing anyone's mind.
I was just going to ask if any deals have worked so far, Joe.
No. Look, he's had this very consistent pack of 20 voting against him. And he's really given away the store in many regards in terms of this motion to vacate, the opportunity for a single lawmaker to challenge the status of the speaker. But still no. One thing we did see today that we haven't yet, though, is the name Donald J. Trump. He was nominated by Matt Gaetz. He got 1 vote.
To be Speaker of the House?
Yes, indeed.
Did not know he could be Speaker of the House.
Well, that's one of the fun things here. You could absolutely, we could have Speaker Tim Stenevec right here, right now. Literally any American could be put up for this as long as you're of age.
Fun is one word to use, Joe.
Yeah.
Obviously, we could go on for more. And you know what? You can listen for more because coming up is Joe Matthew, host of Sound On. For Tim Stanovic and the whole Bloomberg Business Week team, I'm Carol Masser. Thanks so much for joining us. We'll see you tomorrow. And that does it for us. Bloomberg Sound On starts right now.
World headquarters in New York.
And I'm Ed Ludlow at CES, the Consumer Electronics Show in Las Vegas. This is a special edition of Bloomberg Technology.
Coming up this hour, add Amazon, Genesis, trading, Stitch Fix to the long list of tech companies cutting costs by laying off staff. But this is the macro picture. The ADP projects a stronger than expected jobs report for tomorrow.
Plus, the director of the Cybersecurity and Infrastructure Security Agency tells me that cyber safety is a public good that demands, quote, radical transparency. We discuss with CrowdStrike CEO George Kurtz.
And Ed, surrounded by electric and autonomous vehicle technology over at CES, we'll hear from Mobileye CEO, the ambition to target self-driving tech to hit the streets. But first, let's check in on the here, the now. The reality is the markets. And the reality that is good news is once again bad news if you're long these markets. S&P 500 off by 1.1%. NASDAQ Big Tech taking the hit, off by more than 1.5%. And that's because the macro picture once again looks resilient when you look at the jobs picture. The ADP number coming in stronger than expected. Those jobless claims once again showing resiliency. This just means the Federal Reserve has the bandwidth to keep on raising rates. And many in the market therefore anticipating that the terminal rate where interest rates will eventually go from the Fed is about 5% by mid-2023. We continue to therefore see bullishness in terms of where the dollar goes. We expect interest rates to go higher. The dollar goes higher too. We're up about 0.5–6%. Flick it on. Let's dive into the micro because with Ed out in CES, I wanted to do a little bit of the individual companies. Western Digital talks of a merger. Now, amid some of this concern around the market and indeed deals being done, well, maybe Western Digital will team up with its Japanese, well, competitor, and maybe that force will be for good. We're seeing the stock rally 6.6%. Silvergate, though, not a good news story. Let's look at, of course, a very crypto-related lender. Crypto Capital is currently 42% lower. Why? Well, because they're axing 40% of their staff after, of course, the amount of fall in crypto assets meant that people drew down their deposits. They had to sell their own assets off at a discount, and it means that the company is therefore in some grave issues. Silvergate Capital, as I say, one of the worst performers. Amazon off by more than 2%. And Ed, this is again all about jobs. This is about when we get a strong picture coming from the macro. What about the micro picture in technology? What about Amazon saying 18,000 jobs are now to go as they try to really rebalance where the costs come into this business? Ed, I know you are all about the latest product, the latest unveiling, but you've got to be hearing about chat from that on the floor of CES.
Yeah, there's certainly lots of fanfare right here in Las Vegas, but I've spoken to bankers and investors, for example, who are in attendance, and you cannot get away from what's happening in the world of technology. I think what I'm hearing is that broadly, they're talking about how hard it is out there, the difficulty in raising funds, the difficulty in managing the macro environment, whether you are a startup exhibiting here for the first time on the showroom floor, or you're one of the many hundreds of Fortune 500 companies that have gone big on the event. This is a speed dating opportunity, right? You have some of the world's biggest CEOs, investors, their bankers, their top customers, all in one place for 3 days of the year to start the year. And of course, they are talking about what is happening in this global economy. And of course, not just trying to pitch to the consumer their latest innovations, but also what's happening with the consumer in general.
Indeed. And of course, the job layoffs are a reflection of some of that worry around the consumer overall. We got to dig into that story. Well, of course, we bring in a key name, a key voice on all things Amazon and indeed all things technology. It is one Brad Stone, Bloomberg's head of global tech coverage. He's, of course, the author of Amazon Unbound and the Everything Store. And to put it in perspective, Brad, 18,000 is kind of a drop in the bucket when you look at the overall hiring and talent that Amazon has, but still, it signifies something.
It certainly does. You go back 20 years ago after the dot-com bust and Amazon was laying people off, and Jeff Bezos had a mantra, and it was the only way out of this is to invent our way out. And I think that the charge right now from Andy Jassy is much different. It's the only way out of this is to cut our way out. And that's because if you look at the retail business, the oldest business at Amazon, it's just in really bad shape. It lost about $2.5 billion last quarter, but if you back out advertising, it's probably much more, $9 or $10 billion. It's hard to believe, and some of that, of course, is investments in video and autonomous driving, other experiments, but the basic oldest business at Amazon is miserably unprofitable. Investors are clamoring for Jassy to improve it, and his mettle is really going to be tested over these next few quarters and years, and he's starting by cutting the cost structure.
It's tough for Andy Jassy. How much does he have the confidence of an investor base? How much does he have the confidence of the founder of the business?
Well, I mean, first of all, I think it's always worth noting that he inherited a lot of these problems. It was Bezos and maybe the distracted final years of his tenure at Amazon who authorized the major pre-pandemic and mid-pandemic expansion of fulfillment centers, of product lines, geographic expansion, and a lot of that Jassy has had to kind of unwind and narrow some of the ambitions and place more strategic bets. I think he does have the confidence of investors. Like, there's no activist investor at Amazon. There's fantastical rumor about Bezos coming back. That'll never happen. Jassy is the CEO for these next couple of years, but I think it's going to be a big test. He's known for what he did at AWS, and now he has to prove himself as CEO of the whole business.
It was only just the other day, right, Brad, that you were speaking to Dave Limp, who kind of runs the devices business. Do we have any kind of sense of the granularity where Amazon's cutting, where it got too bloated and needs to pull back? Because Andy Jassy was an AWS guy, and you'd imagine that that part of the business is almost sacred.
Absolutely. I mean, double-digit growth rates for at least the near-term future. Still the engine of Amazon. Leave it alone. Dave Limp on the devices side got in touch actually with myself and my colleague Matt Day to say that the reductions in his group were more limited than people thought. And this is my point. These 18,000 layoffs are in the core business. It's retail, and then it's HR and recruiting, because if you're not hiring, you don't need the recruiters. So this is really Jassy looking at the cost structure for the very basic part of the business. Last year was about winnowing down the experiments that weren't working. This year is about right-sizing that main core part of the business, retail, and showing investors that Amazon's oldest business is still a good one.
We just showed that beautiful chart on the screen, which kind of demonstrates the 18,000 jobs being cut. In the grand scheme of Amazon's size, it is small, but it's never pleasant, of course, to lose one's job. It's not the only tech name either that's taking this action, Brad. Salesforce also kind of building out already reported plans to kind of downsize. What do we know?
Right, 8,000 layoffs, smaller than at Amazon, but more consequential because that's 10% of the staff. But look, the story is still the same. If you're a fast-growing company, investors are okay with low margins. But when growth rates slow, they want to see profitability. And Salesforce, for the first time in as long as I can remember, is guiding for the current quarter under a 10% growth rate. Okay, that is not great. At the same time, they've got Starboard, an activist and investor, clamoring for them to cut costs. You have executives like Brett Taylor, who was the co-CEO, leaving. Stuart Butterfield at Slack leaving. Big inflated headcounts from recent acquisitions like Tableau that they're now cutting back on. So it's in many respects the same story. Investors are getting impatient, and they want to see tech companies now show more profitability.
Brad, great to catch up with you. And, well, for many of you, they're still thinking that the worst is still to come, so still more reports on that. Brad Stone, of course, he's our Bloomberg's head of global tech coverage. And well, you might, of course, have caught some of the headlines coming out of crypto that are also jobs-related. Just remember, we're thinking about Genesis. They're cutting about 30% of their headcount. We've also heard from the likes of Silvergate Capital, I was talking about it earlier, laying off 40%. There's also a barrage of headlines around U.S. authorities closing in on Sam Bankman-Fried's inner circle, New York prosecutors suing Celsius's Alex Machinsky, of course, for fraud, and Fanatics slashing its stake in SoftBank-backed NFT firm Canny Digital. Whew, there is only one woman in the business who can take us through all these different headlines. Sonali Basak is in the house. Where do we start? Can we start with the jobs cut? Just because we've come off the back of Amazon and the likes. I mean, Silvergate, absolutely dramatic move in the share price on the back of dramatic moves they're having to make.
There's a lot of concerns that have been drawing around Silvergate for a while now, given their exposure to the crypto industry. A few interesting things here to note here, because $8.1 billion of a run on deposits here, and more than $700 million worth of a loss on securities because they had to force sell essentially here. But interestingly, you have analysts coming out and saying there are very few banks that could sit there and take $8 billion worth of withdrawals here and run on deposits. So there is a two-sided story here, but again, it's something to watch very, very, very closely, because seriously, $8 billion of deposits, usually run on deposits leads usually to more runs on deposits. So have they stemmed the bleeding here? Genesis, I actually think the reason that is so interesting with the 30% job cut issue is that broader issue, we're looking at systemic risk here, not just these single one-off issues, is it's Genesis Global Trading that is facing a lot of these cuts. Genesis Global Trading, remember, did not halt its activity. It was Genesis Lending, the subsidiary, that had halted withdrawals. So the fact now that you're seeing issues here financially and looking to stem issues here through the vein of job cuts for a larger part of this digital currency group empire is really the heart of the issue.
Sonali, hello from Las Vegas. Another busy day for you, my friend. It's hard to keep track of all the headlines from the crypto community from here in Las Vegas. Folks are talking about it. I think there's a big focus still on SBF, right? And the latest with what's happening with him. There's a probe, I believe, into an SBF confidant. What's the latest there?
I would take a look at it this way, because remember, we have Nishad Singh now. There's already been Caroline Ellison, and there's already been Gary Wang, who have pled guilty when you look at the counts brought forward, the criminal counts brought forward by U.S. authorities. Now, the question then becomes about Nishad Singh, who is another deputy, part of the penthouse suite here, stayed in the Bahamas penthouse when it came to where Sam Bankman-Fried lived. This man was also close to Sam Bankman-Fried's brother, friends with him since high school, and a director of engineering over at FTX, so very part of the inner circle here. So we have now that authorities are looking more closely at him as well. We don't know whether he'll be accused of any wrongdoing. We don't know whether he's cooperating. Both of those facts will become very, very important when we look at this overall investigation into the FTX empire itself. Who knew what and who did what when it came to customer money and potentially taking it. Remember, they were accused here of taking the money and paying for personal assets at the end of the day.
Talking about customer money, people taking it and accusations. Tish James getting busy to start off the year, of course. She's the Attorney General of New York, and looking at Celsius, another key area that just crumbled in 2022.
There have been so many strong words crossing wires this week, and I want to read what Letitia James had said in the statement about Alex Mashinsky here of Celsius, who had said, Letitia James saying he promised to lead investors to financial freedom, but led them down a path of financial ruin. Remember, when we talked about crypto the last couple of years, we talked about whether these big lenders, what the responsibility to investors was when they're not FDIC insured like a typical lender is in the United States. And what the Attorney General is here really telling you here, the New York Attorney is telling you, is that they are responsible for customer money regardless of that backstop or not. And so that is a really important precedent, let alone the issue that Alex Mashinsky here in Celsius is facing. So all of these stories, it is worth broadening out and saying, what does this mean for other lenders in the space at a time where we're already concerned? The industry has been so concerned about that big pullback of lending in the industry. It will be interesting to see how this plays out. Remember, Celsius is also going through its own process here, and now what you're having is Alex Mashinsky really being accused here of running a scheme that ran for years before freezing withdrawals.
All right, Bloomberg's crypto, Wall Street, all things finance correspondent Sonali Basak, thank you very much. Now, coming up here in Las Vegas, Panasonic unveiling new projects and expanded partnerships at this year's CES. A conversation with the CEO of its North America division to learn more about what it has in store for consumers next. This is Bloomberg. there's still some focus on consumer gadgets and electronics at CES this year. Samsung, for example, is thinking about cheaper, multifunctional devices. The electronics giant is showing off a new $200 version of its A-series budget smartphone. The A14 5G has a new upgraded 13-megapixel front-facing camera and a 6.6-inch screen. With an economic slowdown globally, Samsung's hoping that entry-level phone appeals to more budget-conscious consumers. Mid-tier smartphones were hit in 2022, and more expensive handsets could be hit in 2023. The Korean tech giant's also thinking about what you're doing at home. Samsung's betting that doubling up a new smart home control device as a wireless charging pad will help it beat competition from the likes of Amazon. The SmartThings station costs $80 and can connect to a user's phone or tablet. The hub can also be used to operate smart home accessories wirelessly. Think fridges, thermostats, locks, and lights. And to set it apart, Samsung's added that wireless charging to the hub to give juice to your phones and your earbuds. So that's what it's like, Caro, out on the exhibition floor, right? We're there in Samsung's booth looking at their latest products. We're kind of poking fun at the idea that CES has been all about cars for so long. You forget there are some consumer electronics, and I thought it was so interesting that Samsung did focus on the low end, right? $200, budget-conscious consumer, value for money, not the dazzling $1,000 handsets that perhaps others have focused on in recent releases.
Yeah, and it is interesting. Also, of course, you tap such a more broader global market by having entry points at such price point. Tell me, though, I feel like the buzzword is also AI, right? And I was reading some great stories and coverage from you and from others talking about, I mean, apparently I can get an AI bird feeder, I can get an AI-focused baby carriage, a fatigue-fighting wristwatch. What are some of the more extraordinary things that you're seeing at the moment, Ed, on the floor?
So last night was really weird. Arnold Schwarzenegger was on stage, David Hasselhoff was in a video, but the reason being is BMW tapped their sci-fi inner side. We'll get to that later in the show. The other big name is Panasonic that really focused on automotive tech as well. The Japanese electronic giant, no exceptions, kind of the rules that are going. New Alexa capability was their deal for in-car infotainment. But remember, Panasonic's main business here in North America is battery cell business. Its biggest client, Tesla, is top of mind. And I spoke to the North America CEO, Megan Wang Lee. This is what she had to say.
We're all about customers. Panasonic is in our business in US for 60 years, as a company 100 years. We really focused on our technology and solution for customers. We love our partners, but we really want to deliver a product and technology and service that fits customer needs. That's what we focus on.
When you make an announcement like this at CES, it's supposed to be a consumer electronics show, right? It's about forward-looking.
Right.
But does a product like that make you more competitive? Does it give you a pipeline of business?
Yes, it does. And as a 100-years-old company, and we grew up with CES too, we have more than 50 years of partnership with CES and CTA. And our message this year is sustainability. And
right. You were on the front cover of CES magazine.
I know. Thank you very much.
Penn
Yes.
was on stage.
Yes.
Why?
He's our climate ambassador, and what he brings and what he's passionate about and what we want to do is nice alignment for our message. So what we're demonstrating on the floor and our message is we believe in, our core belief is contribution to society with technology, and and we are really excited that this year is all about sustainability for the future, but also for the current as well. Our biggest business in North America right now is EV battery. We also made another announcement 2 months ago to invest additional $4 billion for Kansas for the second battery factory.
Right.
And with that, we have 4,500 employees, as is, just focused in manufacturing EV battery. That's going to have another 4,000 employees, and we're really bullish about what we're doing in EV battery sustainability and electrification of transportation.
You took us there. Let's stick with EV batteries. We have to talk about Tesla. You know, the story around Tesla right now is about concern for demand. My question to you is, if there's a drop-off in demand for customers like Tesla, does that impact demand for Panasonic's battery cells? Or does a customer like Tesla have to commit to some volume anyway, even if their demand for the end product drops off?
We're not that concerned about that right now. We're trying to really provide the quantity and quality that Tesla is looking for. We have about 10 years of experience working with Tesla, which has been wonderful. As a Japanese 100-year-old company working with Tesla has been a wonderful learning experience. We also announced the partnership with Lucid.
Yes.
And we are diversifying our contribution in EV battery for this market. And we're not worried. We're very excited.
Panasonic North America CEO there. Meanwhile, we've got so much more coming from CES. Instacart CMO Laura Jones on the company's latest connected store technologies, including Capercart, that big purchase it made, and Scan and Pay feature. This is Bloomberg. From CES now, because I get to catch up with the Instacart CMO, Laura Jones, asking about how the company is thinking more B2B than B2C at the moment, about becoming a technology solution for big companies. Take a listen.
We're increasingly focused on becoming a retail enablement platform. And so in addition to our marketplace, which you described, that personalized shopping, we're also offering technology to enable our grocery partners to bring technology into their stores. So at CES this year, we're showcasing our Caper Carts, which are AI computer vision enabled shopping carts that let consumers check out as they shop. We're also showing electronic shelf tags, carrot tags, that help consumers and Instacart shoppers more easily find what they're looking for. And we're also showcasing some integrations between our app and that hardware. So for example, lists, your shopping list that you'll have on Instacart, you can also access if you're shopping in store. So that'll be a great integration that really recognizes the fact that customers increasingly are shopping both online and in store.
Also, another way in which Instacart's been trying to pull the levers of growth is by advertising in and of itself on the platform. You as CMO, I'm sure, deeply integrated in this. Tell me about how you're looking to make that process easy, how you're looking to make that evolve for the users that you have.
Yes, we love that our platform can help our customers discover new brands that they'll fall in love with and that will become part of their weekly shopping routine. And so we have a really robust suite of advertising products, everything from kind of our classic sponsored products all the way through to new launches like shoppable video that lets brands really tell a more fulsome story and act more like a mid-funnel solution in our app to inspire users who might not have considered that product to add it to their cart. And what's great is because we're a closed-loop system, you can really track the efficacy of these ads in a way that's quite unique.
Data's still the key currency. Meanwhile, coming up, all things cybersecurity with CrowdStrike CEO George Kurtz. From New York, from Las Vegas, this is Bloomberg. Welcome back to Bloomberg Technology. I'm Caroline Hyde in New York. Ed Ludlow, he's in Las Vegas at CES. And Ed, I mean, what, 100,000 or so people there? But you must be bumping into a fair few pretty senior executives, right?
Yeah, it's interesting. We kind of joked about how automotive technology dominates, but you do have Samsung here with their big splashy displays. There's a lot of emphasis as well on cybersecurity, which I thought was really interesting. I caught up with Cybersecurity and Infrastructure Security Agency Chief and Director Jen Easterly, who's basically trying to hammer home this message. If you're working on new tech, right from the outset, you need to be focused on cybersecurity. This is what she had to say.
This is fundamentally about keeping them safe. We live in a world that's highly connected, highly digitized. The infrastructure we depend upon is all underpinned by technology. And so it's a matter of actually doing right by your clients. But I think boards and CEOs and business leaders actually need to look at corporate cyber responsibility in the way that they look at corporate social responsibility. Cybersecurity, cyber safety is a social good. It's about societal resilience. And particularly with everything connected these days, you can't just worry about your own company. We have to stop putting self-preservation over collaboration.
Think about the software makers in particular. You know, you've been up on stage, your audience is sitting there, but beyond that, how do you encourage them to do this in parallel with writing code or developing new programs, introducing the cybersecurity aspect?
Well, so there are many ways this are done. If you go back to the 1960s, actually everybody blamed car crashes on bad drivers. But then there was a whole movement about actually cars are unsafe at any speed because they don't have seatbelts, they don't have airbags, they don't have anti-lock brakes, they don't have crumple zones. So ultimately down the road, it may be a matter of regulation. But right now, what we need to do is to inform our consumers about their basic safety, and they need to be demanding radical transparency from these software makers about whether they're building software that is secure by design, so less and less flaws and defects, and secure by default with security features like multi-factor authentication baked into the product. So I don't have to tell my 90-year-old mom or my kid, oh, you've got to enable MFA. They have no idea what multi-factor authentication is.
Well.
You know, this is about consumer safety. And again, I love the innovation, but the incentives are skewed. We need to balance the incentives. And at the same time, leaders need to look at this cyber risk as a core business risk and their own responsibility.
Can I ask what's motivating you to do this now? Is your agency seeing a ramp up in threats? Are there more things crossing your desk that's made you think, right, I actually have to start doing more to get this message across?
Yeah, I've been doing this for a really long time, and every year they ask the same thing. Is it going to be the same thing? Are we going to just see more threats and more attacks and more ransomware? And frankly, I don't think that that is sustainable given that everything is increasingly digitized and connected. $6 trillion cybercrime damages last year, projected to be $8 trillion this year, projected to be $10.5 trillion in 2025. That is the GDP of India, Germany, and the United Kingdom combined. We cannot continue to allow this to happen. It's not sustainable. And so we're really trying to motivate a movement where consumers are asking hard questions so that technology are thinking about safety as much as they're thinking about innovation, that core business leaders and CEOs and boards are embracing corporate cyber responsibility as a matter of good governance, and frankly, trying to create a paradigm shift of how government and industry relate to each other.
Well, I think about the world we're in right now, the war in Ukraine being an example. Is the war in Ukraine driving an increase in ransomware attacks here in the United States, for example?
No, I don't think it's driving an increase in ransomware attacks, but I do think it is a reminder that there are various serious threats out there, whether there's Russia, China, Iran, North Korea, or cyber criminals that are given safe haven and sponsored by some of these nations that can do significant harm to our businesses, but also, you know, what we've seen from hospitals, what we've seen from K through 12 school districts. One of the things that I worry most about are what we call target-rich, cyber-poor entities. So that's schools, that's water facilities, that's hospitals that don't have the resources to be able to raise the baseline in cyber. So we're going to spend this year really working with them to ensure they have the resource, the capabilities, the expertise, the technical guidance to be able to drive down risk. But in a world where technology is created secure by design and secure by default, we won't really have to worry so much about small businesses that are going to get taken out because they're not putting cybersecurity
Sounds a bit like a team effort, right?
It's a total
Lots
team
of government
effort.
agencies.
Really fascinating from Jenny Slee there, and I think it's so right to shine a light on those perhaps that don't always be able to invest in cybersecurity. And many worry as we enter a downturn, Ed, that maybe people would pull back on that sort of spending, and it's probably the most area that people need to invest in, particularly if you're a financial services company. But I'm interested as to who Who was she speaking to? Who is her audience at CES when she's coming to those sorts of events?
Yeah, I mean, when I asked her about the motivations, right, she talks about protecting the consumer. You know, that is an incentive for the private sector to act, to make sure cybersecurity is top of mind when they're working on their latest technology. But actually what I heard was that was a message to the private sector, right? She's saying, hey, and you know, Jen's a rock star in this world, not just kind of a government official, but a rock star in the world of cybersecurity. And what I heard was, private sector, you need to get on board with this and get your act together. And that's fortunate, Caroline, because we can continue this conversation with CrowdStrike CEO George Kurtz. And what's more is actually, you know Jen very well.
Yes.
Do you agree with that Jen's message was to you, frankly, that you, the private sector, but also those outside of cybersecurity, need to be doing a lot more?
Yeah, it might have been more to Microsoft, but you have to ask her in terms of building secure software by design. But I think as an industry, you know, we have to have security built by design. And we're at CES, and I think a big part of it is there are many different consumer devices that come to the consumer not secure out of the box and not looked after for their lifetime. And that becomes problematic and creates risk in the environment.
Microsoft, what did you mean by that?
Well, when you look at the technologies that are in play and a lot of the exploits that happen, they're on Microsoft technologies. I mean, Patch Tuesday is, you know, how many vulnerabilities can we patch? So many of the big breaches that we've investigated and report on have exploited Microsoft technology. So I think what she was saying, and I was on the panel with her today,
yes, you were, yeah.
Right, which was like, you can't blame the victim. In other crimes, we don't blame the victim, right? In cybersecurity, it's like, well, they didn't patch, they didn't do this. Well, how did that vulnerability get there in the first place? And creating secure software by design is really important for the consumer and the enterprise.
George, let's talk a little bit about safety and indeed where the threats are indeed coming from. For 2023, are we seeing anything novel, anything new, any new kind of attackers, any new players within this game?
Well, when we think about 2023 and a challenging macro environment, what we have to look at is during a recession, and I've been through many of them, I've been doing security for a long time, cyber adversaries tend to get more active. Cybercrime goes up. Why? Because we've seen it. You've reported on the layoffs in tech and in other places. Whenever people are coming and going, there's always an opportunity to abuse that identity. When people aren't minding, quote, the store and looking after systems, there's opportunity for these e-crime actors. So we think it's even more important as we get into a challenging environment that cybersecurity is front and center for large and small companies and, of course, the consumer.
I want to ask you the same question I asked Jen, which is, where are the threats coming from? You know, I asked about the war in Ukraine and whether there was a direct correlation with the war in Ukraine and a ramp up in activity in ransomware. As an example, she said, no, that's not the case. But we keep hearing, well, the threat's there. That's what's motivating her to speak. So where are they coming from, the threats?
Well, we break the threat actors into three different groups. We have nation-state actors, we have e-crime, and we have hacktivism, right? Just a simple way to think about it. So the nation-state actors, Russia, China, North Korea, et cetera, Iran, are always going to be active. Whether it's good times, bad times, war, not war, they're always going to be out there. And when we think about Russia, I would say many thought there would be more activity around the Ukraine conflict, but it's not like Russia forgot what they were doing. They're still very active in this environment and collecting information, maybe not as destructive as we thought. Then you turn to e-crime. E-crime is a huge business. Jen talked about it. It's really ransomware as a service, e-crime as a service. You really don't need to understand anything almost about technology. You can buy access from an access broker. You can buy a ransomware from a ransomware as a service. By the way, there's a revenue share on that as well. They've got their own business model, so they actually collect a piece of that revenue. And then at the end of the day, you just assemble it together, you execute your campaign, and you can make a lot of money without a lot of risk.
George, aside from attackers' own revenue streams, talk to us about yours, because as people do dial back spending, R&D, and maybe their own cybersecurity during a period of downturn, we have seen, for example, your own revenue at CrowdStrike hit by that. Are you feeling that the worst is over? Are you worried as you go into 2023?
Well, we think about when we go into 2023, obviously many companies have seen headwinds, you know, lengthening sales cycle, those sort of things. As other companies, enterprise, SMBs, evaluate their own budgets. But at the end of the day, when I think about security, it is a very resilient industry. And for me, the hierarchy of needs and corporate needs, it's like shelter. You have to have security, whether by regulation or by business resiliency. And one of the things that Jen and I spoke about was really that it's a board issue. The board is looking at business resiliency, not just the annoyance of someone's a single computer being impacted. We've seen companies literally get taken off the map for weeks and months on end because they didn't have the resiliency in their cybersecurity program.
We're only 5 days into 2023. George, Kurt, CEO of CrowdStrike, we'll have you back, Caroline and I hope, some point again this year. Now, coming up, Mobileye CEO Amnon Shashua talks to me about the future of self-driving. This is Bloomberg. Mobileye, the self-driving startup spun off from Intel, says revenue from automated driver assistance systems will total more than $17 billion through 2030. Earlier, Mobileye CEO Amnon Shashua told me about their ambitious plans.
I think what we're telling investors is if you look at the pipeline, the booked business pipeline going forward is significantly higher than the guidelines that we are giving in 2022.
Right.
For example, the design wins of this year, of 2022, account for $6.7 billion of booked business, which is 4 times more than the guidance for 2022. It means that, when we look at our growth going forward, it is very, very significant. Significant also in our ASP, in terms of the dollar per car that Mobileye is receiving is doubling as we go forward. For example, this $6.7 billion accounts for about 60 million chips design wins this year, so it's about $100 ASP compared to $50 ASP of today.
What drove those wins, though? Was it the idea that you kind of spun off from Intel and suddenly Mobileye's in the headlines and all these automakers and tier one go, oh, I want to do business with them? Yeah. Or was that kind of already in the works, that pipeline of business?
No, I think visibility will play a significant role as we go forward, but we are only 3 months after the IPO, so it's not visibility that played a role here. It is things that have been in the work. Especially, we launched a very significant product called Supervision in China. Supervision.
Stop and tell me what Supervision is. Is this full autonomy or is this a driver assistance technology?
So legally, it's a driver assistant technology, but it's really full autonomy. So the way it works together, the way to imagine it is really the ultimate evolution of driving assist. Driving assist today is a front-facing camera, sometimes a radar. Right. Now imagine you have 360-degree awareness, 8 megapixels are 11 cameras of 11 megapixels around the car, providing huge resolution of data to high-performance computing. You build a full, environmental model, detailed environmental model, and now you can drive autonomously.
And is this real? Why? It's in consumer cars today.
70,000 vehicles in China already.
Okay.
This is from a single brand. We have a booked business for 9 brands over 6 OEMs, launching starting from this year up to 2025.
But when you say this year, do you mean vehicles that roll off the production line in 2023, and they carry this technology?
Carry this technology. So from the driver experience, it's kind of full autonomy, but from a legal, it is eyes on. You need to be alert, because there could be all sorts of black swans or edge cases in which the driver needs to take control.
Is it limited to China as a market or jurisdiction, or are you rolling this out globally?
No, we're rolling this out globally. It's starting in China, rolling this out globally.
And how much of a contributing factor is supervision to that $17 billion forecast through 2030?
So it accounts for $3.5 billion.
Okay.
But really the interesting number is that we started deploying supervision only 6 months ago, so during 2022. And during this 6 months, we have 9 brands, 6 car OEMs with booked business for this product.
Which ones? Give me some names.
I cannot mention the names. It's not that important, but it's really global.
This is the first time you've seen me since 2020.
Yeah. Yes, but still, car makers have their own agenda of when to release.
I know.
But I don't think it's critical who it is. What is critical, it's global. It's in Europe, it's in the US, it's in China. So it's really global. And what is also important about supervision, it's really a bridge towards full autonomy, towards what we call eyes off, where you can legally disconnect from driving. Because if you invest in supervision, going from eyes off is really becoming incremental, adding active sensors, a bit more compute, and that's it.
Oh, he wasn't taking your bait, Ed. 2020, the last time I saw you, wasn't going to name names, but of course, I mean, that's reason that he's at a consumer conference, right? Because Mobileye isn't known by a consumer, it's just what's in your car already.
Yeah, to cut through the jargon, Mobileye makes chips or system on chips which provide some kind of advanced driver assistance, but they sell them directly to the car makers, or at least to their tier 1 suppliers. But what's interesting is this goes back to the whole theme. This is real. Their product is real, and they're ramping up their output of it. And it's kind of a departure from the CES of the past, where all of this stuff is concept related, or it's so distant. And I found that quite refreshing. And to be honest, if you walk around the halls here, there are lots of names that a consumer wouldn't recognize, but they do have tangible products, and I find that fascinating.
Yeah, I mean, AMD is one of the keynote speakers, and not many who use a phone or use a technical device particularly know it's an AMD chip or not. But I suppose to all of this, it speaks to getting their name out there, ramping up. And as we were talking about yesterday with Keith, it's all about pragmatism this year, right? Even if I can say the word pragmatism. Maybe a little bit like how the rest of the market's feeling. Meanwhile,
yeah, pragmatism and profit, that's the way.
Yeah, all the P's. Meanwhile, we've got a P coming up, a president no less, but it's Technalysis Research President, Chief Analyst Bob O'Donnell is joining us from CES. Mr. Bloomberg.
let's wrap up today's coverage of